So in today's webinar, our discussion is going to be structured around the topic on your screen: Smart Traders Guide, Secrets to Successful Trading. Okay, Smart Traders Guide, Secrets to Successful Trading. Okay, and what do you think? Please do. I did open a space for questions previously. Nobody asked the question, so please do keep your questions till the end of the class. I'll give an opportunity to ask questions again. Okay, so before we proceed, what do you think? What do you think? God's will, please drop your question, or if it's a question, drop the question in the question section. What do you think the secrets to successful trading is? What do you think the secrets to successful trading is? Everybody on the call, what do you think the secrets to successful trading is? What do you think it is? What do you really think the secrets to successful trading is? I'm open to responses, okay? Drop your response in the chat box. What do you think the secrets to successful trading is? I love these ideas I'm seeing. I love the comments I'm seeing. I love them, like, well defined. Someone said discipline. Someone says patience. Someone says understanding the market. Someone said knowing when to enter and when to cut your losses short. Wow, I love every single thing I'm reading. Okay, so yeah, we all say things from our perspective, and I believe it is the truth. Every single thing we say is the truth, even though I won't be touching everything, but I have something well detailed. I best believe this will work for you if you put them into action, into use. Okay. But first, before I begin, let me quickly give you a quote. Okay. A quote, or I'll drop the quote in the middle of the class. Let's dive right into what we have today. So, truth is, trading the global financial markets can be a very tricky proposition. Okay. If you don't have a well defined game plan. See, in the financial markets, you can make money if price is going up. You can make money if price is going down. It's very tricky to know if you should capitalize on the up or you should capitalize on the down. If you don't have a well-defined game plan, you don't have a well-defined trading plan, you will capitalize on the up, you capitalize on the down, and you won't make money from any at all. Okay. So basically, taking a step back and approaching the market with a big picture in mind at all times is an important facet of trading or of profitable trading. Okay. Take a step back. You took a loss. You want to quickly take another trade. Fine, it's okay. You've gotten another trade opportunity. But the question really is, should you be taking that new trade? Or shouldn't you take a step backward, understand why you took that loss? Am I making sense? Yes or no? Am I making sense? Am I making sense at all? Okay. Like, you need to basically take a step back and approach the markets with a big picture in mind. Understand the markets with that big picture, with that big perspective, with that goal in mind. Okay. All the time, every single time. Because that is just the important facet to profitable trading. Okay. And the truth is, in this webinar, I will, okay, at EG Markets, we'll tell you the truth. We'll tell you the way it is. Okay. We'll tell you the truth about and the secrets about trading that will improve your edge in the markets, that will improve your profits, that will improve every single thing about you when you're trading. Now, I'll say this thing, I won't say it at the end of the class, but I'll say it now, okay? It is not by coming to the webinar, okay? If I tell you every single secret today and you don't put into practice, you don't resonate around the secrets, you don't put the practice into action, okay? Every single thing I tell you is a verb. You need to put it into action, okay? You need to put them into action. Put them into action so you can see results, okay? I'll tell you every single secret that will improve your trading today. Put them into actions. That's how you get results. Okay, so let's dive right in. First thing first, the number one secret is understand what the market really is about. Understand what the market really is about. See, you might be telling yourself that you are ready for trading and you may have already identified the markets to penetrate. to penetrate means you want to rack the most profit from it. But the truth is, there is not one ultimate best market in all of this. Okay, there is no best market to trade. Okay, there is no best market to trade. Like I said before, I trade just um, three financial instruments: EUR/USD, GBP/USD, and CAD/JPY. Recently, I added gold. Before, I was basically saying EUR/USD, GBP/USD, and CAD/JPY were the best markets that I make a lot of profit from. I tried gold out one day and I made a lot of profit, and I realized there is no ultimate best market in all of these markets. Okay, I'll use the forex market in this instance. We have a major of 28 major of 28 currency pairs. There's no best one among them. The one you consider as best can make somebody else lose money. The one the other person considers as best can make you lose money. Okay, the real choice basically depends on what you want to trade and what you can afford to trade. Okay, imagine somebody with a $10 account wanting to trade the Dow Jones or the Nasdaq. It's not possible. So it really depends on what you want to trade. What do you really want to trade that your $10 can allow you to trade? So every market has its own profit potential. The question is, how much capital is needed to trade the asset? Understand what the market is really about. It's not just about making that deposit and wanting to start trading. Yes, make the deposit, come with the urge of learning, of wanting to trade. But understand that every market has its own potential. What can your capital trade? Don't over leverage. This is basically telling you not to over leverage. Follow the rules. There's a rule to the game. Follow the rules every single time. That is how you gain an edge. That is how you start the step to your success journey when it comes to trading. Control your emotions. See, to the inexperienced mind, okay, the inexperienced mind, emotions can become your worst enemy when it comes to your investments. Okay, when it comes to trading, your investment. You know, when you put in money in the market, it's an investment. You're waiting to profit from it, to get an ROI, return on your investment by trading. Okay, it can become your worst enemy when it comes to your investment. Okay, I'll tell you a story before I continue. Over the years back, I was a big fan of cryptocurrency. I liked trading cryptocurrency because of the amazing profit potential that comes with it. I can put in 100,000 naira and make 300,000 naira the next 3 days just from trading cryptocurrency. Okay, I was always making money because we were in a bull market. When the bear market came, I lost every single thing and more. Every single thing I made, I lost it back and more. Okay, so how could I have avoided those losses? It was literally if I understood the market, bringing us back to this. If I understood the markets, okay, if I basically understood the markets and my emotions were in control. Wow, I think I skipped a line or a page. Wow, I skipped the page. I skipped the page. Oh, okay. We'll come back to this then. Okay. So basically, when you control your emotions, you understand what the market has for you. You will not make some types of decision. I'll tell you a quote from one of my favorite mentors. Okay. Michael J. Hudson said, "It is crucial to understand the efficiency in trading by the way of process-oriented thinking." Okay, it is crucial to understand that efficiency in trading comes by the way of process-oriented thinking. It is not just by the way of being reacting to price or impulsively thinking or rushing ahead to trade signals prematurely. You need to keep your emotions in check. You need not to FOMO into trade. Okay, people tend to attach themselves with financial instruments emotionally rather than either because of their sunken cost or other reasons. I'll tell you the truth. The reason I traded that financial instrument that I lost money with in the cryptocurrency market was because of a friend traded it and made money. Okay, so for instance, some traders incur big losses after trading certain instruments without adequate analysis simply because their friend buys this instrument. Just because of a friend made money from it and wanted to make money from it also. See, the truth is, always go with what your analysis or your research tells you. Learn to trade in a way that your emotions have no say in your decision making process. You see, like I said, Efficiency in trading comes by a way of process-oriented thinking. Efficiency in trading comes by a way of process-oriented thinking, not just by way of reactionary or impulsively thinking or rushing to trade signals prematurely. Do we all understand? Do we get it? How to control your emotions? You need to process-oriented thinking, like sitting down and deciding, if I trade AAA, what are the chances I will lose money? What are the chances I will make money? What are the factors attached to this financial instrument? What are the factors not attached to this financial instrument? Am I becoming a perm, that's a permanent biased trader to this financial instrument, or am I treading the waters safely? So, do we all understand how to control our emotions now? Yes or no? Do we all understand how to control our emotions now? I like to get a lot of response actually. I like to get a lot of response based on this because I feel emotions and psychology, they are in tandem. You see, psychology, greed, emotions, every. Okay, so let's go back to this. Let's go back to that slide when it's so responsibility is the key. Okay, or it's the key. You see, every successful trader has a similar trait. Okay, every successful trader has a similar trait, which is basically accountability. See, I know some people that lost money and said at all. Basically, what the person was trying to say is, if he had followed his mind, he would have made money, but he followed someone else's opinion or bias about the market. You see, you will never find a successful trader that blames other person or events for his or her trading losses. Never. I've never blamed somebody for my losses. I've never blamed a certain financial event or news event or something for my losses because I understand when to stay out and when to be in. Okay? You see, this is crucial, or this is of crucial importance in becoming a successful trader because unless you take complete responsibility for all your trades, you will never completely rebound from small failures and you will deprive yourself of your reward. Take responsibilities. Take responsibilities. Don't say it's because of FOMC I lost the trade. Don't say it is because of somebody said this will happen. That is why you close your trade and you didn't make enough of profit. Okay? Don't say because of this, don't say because of that. No, not at all. You are a trader, you are meant to take responsibilities for your trade. What if the person was not there? Okay, what if the person was not there or the person were not there when you took the loss? Will you still blame the person? Or won't you chin up and agree that you took a loss based on your own decision? See, if you don't embed this attitude, you may succeed in the market, but only for a while. Okay, you can keep on playing the blame game, the status game, the blame game. But just understand that every single profit you make is out of luck. And remember, luck doesn't stay everywhere. Okay, it moves. It's like a moving train. It goes around. So it will leave and it's going to come back. And you don't want to just be profitable every time luck comes your way. You don't want to be lucky on a certain trade. You want to like make money off this trade yourself. So always take responsibility for your losing trade. I see a lot of things on the Telegram channel. And yes, it's brilliant to share ideas. It's brilliant to understand other traders are willing to give a perspective of their own idea. But don't be subscribed to such. Like, don't be subscribed to other people's thoughts. I can give you a top-down analysis of. I think I'll do that today. Okay? I'll give you a top-down analysis of GBP USD. Or I know I've done GBP USD. I'll look for one. Can anybody recommend a financial instrument that I should do a top-down analysis on? Just drop it in the chat box. I will pick one or two, and I'll do it and send it to the Telegram channel. And what I want to say is, even if you have an idea based on my own perspective, don't be subscribed to it. Go and see why I am saying such. Go and see why did I mark this out? Why did I mark that out? Go and see why. Because it's all about you. All about you. It's your capital, it's your money. It's not about me this time. It's not about me. It's all about you. So basically, you want to use my own idea to evaluate, not to get subscribed to what I'm thinking. That's how you take responsibility. So whenever you make that trading decision, if we now end up having the same bias, you can say, yes, okay, yes, I'm okay. Somebody better than me has a bias, thank God, okay? But if the bias are different, don't switch up your bias because of it's different. Rather, there are two things you can do. It's either you go ahead taking the trade with your own bias, or you stay out and see, okay, there are contradicting biases all around. You don't want to lose money. It means the market is not really giving you a tandem approach to the markets. Okay, so let's see if I missed any other slide again. Okay, let's just confirm that. Great. So to the next thing, plan a trade and trade a plan. Okay, plan a trade and trade. I've said this a lot of times on the webinar. I've said this a lot of time, and you see, planning trade means having a defined trade environment, defined trade parameter, executable criteria, understanding why your trade should pan out. That's just what planning trade means, and trade a plan. Define trade environments, determine your trade parameters, executable criteria, understand why your trade should pan out. You see, what this rule means is that you should formulate a system. That is a system. I just give you a system right now. A system that is most appropriate for you, and stick to this system regardless of the situation of the market. This is your strategy. This is your approach. This is your methodology towards trading the global financial markets. You see, this plan should help you get through to every situation or development. It will help you pass through every situation and also help you develop. You see, remember that once you've let go of your money on the trade, once you've pressed that buy or sell button, you have to also let go of your control, because there's nothing much that you can do anymore, rather than either close it in a loss or close it in a profit or close it in a break even. You can't even predict how price will react, because of price can decide to skyrocket and go your direction or skyrocket and go against you. Okay, the only thing you can do at the moment is to stick to your plan, which is, what is your entry strategy? Defining your trade parameters. What is your exit strategy? What will you do if there's a merger? What will you do if price gets closer to your stop loss? These are the important questions that needs to be in your trading plan. Make sure that your system covers everything you can think of when you are in a trade. Then you simply follow your game plan, and there's no stress to yourself, or you don't need to do a lot of thinking when such situation comes up. You let your stop loss and your take profit worry about the trade. You don't need to worry anymore. Like, you don't need to worry anymore. You let your stop loss worry about the trade, because you've put in everything in place. You don't need to even babysit the trade at all. No, not at all. You don't need to babysit the trade at all. You just need to let the stop loss do the worrying for you. That's just the idea behind the trade. Planning a trade and trading a plan. Defined trade environments. Determine your trade parameters, executable criteria, understanding why your trade should pan out. That's basically it. Very, very simple. You see, so the next thing, manage your risks. You see, many a trader believes that making a grand entrance when you first start trading is the key making profits in the financial markets. Okay, the key to making profits, the key to making money in the financial markets. But what can I say? They couldn't be any wronger or any more destructive. You may think you are set after all. You've picked a very, very sweet financial instrument. You've downloaded your software to trade. You've funded your account. You've gained enough knowledge about day trading, swing trading, scalping, or position trading. However, you start looking for a setup or trade idea to capitalize. Make sure you have something in place to control your losses. Okay, make sure you have something in place to control your losses. Something in place to control your losses. How? This is what takes us back to this, your plan. That is where your risk management plan is. I'll share a bit of my risk management plan, just briefly, to give you an insight of how my risk management is. How do I make 10% profits per month? It's very, very simple. 10% of my trading account. Now you might be wondering, you have a $100 account, you make 10% per month, that's $10, too small. There's a spreadsheet I saw of a funds manager, okay? He was making 30% yearly. 30% year. I was shocked. I was like, I could make 10% consistently every month, and somebody is here making 30% yearly. Then I had to like understand why. Why? Then I got a lot of reasons into why he makes 30% yearly. Now, that doesn't mean I'm making 10% monthly is a bad thing or something. No. We all have different accuracy rate and all. But the truth is, how do you make 10% monthly? By managing your risks properly. Set the right trade goals, trade plan, and trade it. This is it right here. What is your risk to reward ratio? I use the risk to reward ratio of 1 to 3, minimum 1 to 3. And I'll be risking $1 to make $3. And I risk between 10 to 30 pips. As if I'm risking $3, I want to make $9. That's what I basically do. And it has worked for me over and over and over and over again. That's how I manage my risk. That's how I do it. 10 to 30 pips is what I risk per trade, and I'm comfortable with it. Because if I lose 7 trades and I win just 3, I will still come out with a good amount of profits. That's having an accuracy rate of 30% in the market. I don't need to check the charts always. I don't need to trade always. Okay. Imagine I have an accuracy rate of 40%. Imagine I have an accuracy rate of 50%, 60%, 70%, 80%, and I lose just 3 trades. I win every single 8 trade. That's some amazing exponential growth. And that's how you become a successful trader, managing your risk properly. Be realistic and stick to your plan. You see, we get carried away a lot as traders. You probably won't find a seasoned trader who can tell you that he has won all of his trades. I don't win all of my trades. I take losses. Okay, I don't win all of my trades at all. This is me telling you the truth. I've never told anybody I used to win all my trades self. No. I tell you, I take losses. I have bad trading months. I have good trading months also. You see, that's just the truth. Anybody that tells you they've never took a loss, they're always winning, they're always this, it's a lie. They just want to take your money away from you, or they want you to pay them to teach you something that won't work. Okay. The truth is, most traders would only register a battling average of 60% of their trade at maximum, even while they stick to a very good trading strategy. The highest accuracy rate I've seen is 75% from somebody I know. Like somebody I know. Out of every 10 trades, he wins 7, breaks even on 1, loses 2. That's somebody I know, very close associate of mine. Okay. Most traders would only register an average, like relatively close to 60%, not even 60%. See, the overall goal is to get a ratio that favors the winning side over the losing side. That's the overall goal. That's how you become realistic and sticking to your plan. When you win, okay, or when your wins make more money for you, you can absorb the losses without hurting your finances too much. I'll tell you how to do it, and I just explained it to you. You see, all you need is to risk less and plan to make more. Remove fear totally from your trading. Okay, from your trades, remove fear totally from it. Once you remove fear totally from it, you'll be able to follow this plan, which is to risk 1. Whenever you're risking 1, look to make 3. If I'm risking 1 bottle of Effa water, if I'm giving out 1 bottle of Effa water, I'm looking to make 3 bottles of Effa water back. If I'm giving out a pair of jeans, I'm looking to make 3 pairs of jeans back. That's business, and trading is a business. So if you lose $1, if you lose $10, if you lose $100, you are looking to make $3 back. You're looking to make $30 back. You're looking to make what's it called? You're looking to make $300 back. That's how you can absorb those losses without hurting yourself too much, without hurting your capital too much. That's how you become realistic, and that's how you stick to your plan. So I'll be sending out a poll right now. Please let's respond to it, okay? I'll be sending out a poll right now. So I sent out let's see, 2 polls. Okay, I just sent out 2 polls right now. Let's do what to respond to it. Thank you very much. So before we proceed, let's do what to respond to it. So how do you become more realistic? How do you set realistic goals? See, if your account is small, the only thing that should be on your mind is growing your account without high risk. What should you aim for? You don't even need to aim for 100% accuracy rates. Making 6%, I thought on a webinar I held, I taught everybody how to make 6% per day when trading. How to make 6% per day. I taught everybody how to make 6% per day. Basically, just looking for simple patterns on the chart. I taught how to convert that 6% per day to 6% per month, which is basically looking for that thing on a bigger scale and giving yourself more rest, more peace of mind, not being on the charts always. I taught how to do it. And all you need to do is you need a minimum risk to reward ratio of 1 to 3. You need to understand how to enter and exit the markets, which I've spoken about. So, in conclusion of every single thing I said, you see, there are many principles and qualities that play their roles in the achievement of success when you trade or trading success. See, there's a lot of things that you need to know, that you need to incorporate just to be successful when trading. But do you really need to know all of them? No, you just need to know the important ones. But nevertheless, secrets to successful trading, which we disclosed to you, are the most little known, which in no way downplays their importance. Like I said, it's all about importance. Rather, on the contrary, there are those secret ingredients which could make even those who already abandoned all hopes to achieve a stable result in the financial markets become hopeful again. Those that have lost hope of they can't make profit from the financial markets, going through this, or if they attended this webinar or watching the replay of the webinar on YouTube, this is going to give them hope, because all they need to do is just follow this thing over and over again. Rinse and repeat, rinse and repeat. Mastery comes from repetition. Mastery in the global financial markets comes from repeating the same process over and over again. Profitability will pop up to you when you repeat that same process you used to make money last week. Repeat it again this week, repeat it again next week, next week, next 3 weeks. That's how you become profitable. Not by somebody said GBP USD will buy. He said he saw bullish order block, and you went there. You do not see bullish order block. You now decide to take it because of the person has been winning trades every single time in your face, but he's not sharing the losses. These are the little things that set traders off track. And I want you to understand that. Follow these secrets to the core. Follow them religiously, and you will be profitable when you trade. Okay. See, it might well be that some of the ideas, some of the things I've said in this webinar contradicts your understanding of successful trading. Okay. But it's very, very normal. You see, I've come to understand as traders, we all have unique trading experience, which is why no one is obliged to agree with somebody else's opinion. As I tell you, don't be subscribed to a single opinion. If you find something contradicting in everything we talked about today, inbox me on Telegram. Tell me this is what and what you find, or you can say it on the group and tag me. I will give you a response, because it's all about our perspective. There are 10,000 ways to trade the financial markets profitably. One way doesn't hinder the other. That's why you shouldn't jump into conclusion. Ignoring any of these discussed secrets. Okay, don't jump into conclusion by ignoring any of these things we talked about because it doesn't align with you or doesn't relate to your trading style. Follow it. All informations are best to you, or are very, very good to you, if you understand what to do and what not to do. If you understand how to go about it and how not to go about it, how to do it the right way. So we've come to the